Hello, my name is Nelson Letsweni. I am a financial planner with Moedi Financial Training. And today I want to cover a topic that I believe is very, very important to any and everyone who's ever held a job or looks forward to the future, and that is retirement planning. Planning for your retirement. Now, this video is for educational purposes only and should not be construed as financial advice. So if you want proper, real calculations for your own retirement planning, it is very important that you contact the services of a trained professional. Now, this topic is one of those topics that I've covered a portion of it in my book, My Money, My Power. My Money, My Power. You can look at that. And I have portions as well in other books like Seven Essential Money Skills and the Money Field as well. But this is where you could find a little bit more about this particular topic. Now, retirement planning is one of those incomes that I have identified in a previous video here as a basket of income that could come to you. We talked about profits and dividends and interest and rentals and capital appreciation and royalties, and of course annuity income is one of those things that you could deliberately make a decision to say, I'm gonna put money aside for that. Like we said, you can invest money to get interest, invest money to get dividends, invest money to get profits, to get royalties, to get for capital appreciation. But one of those things that you should actually never ignore is annuity income or pension income. So now, to say, what are the advantages of you contributing to a retirement fund, a pension fund or retirement annuity? What are the advantages? The first advantage is the protection that this investment has. Of all the investments that you can make, there is not one that is as protected, legally speaking, as a pension fund or, of course, a retirement annuity. Same things. When I say pension fund and retirement fund, consider the same thing. Retirement fund is basically retirement annuities, the one outside of your employer where you are contributing to an insurance company that has a policy for you. Pension fund is normally associated with your employer. So now, these are very, very protected from insolvency. For example, should your estate be insolvent, you are in such big trouble that the sheriff wants to repossess your stuff, the retirement or pension fund cannot be repossessed. Creditors that you owe money to, they can take anything around you, but they cannot take your retirement or pension fund because the law protects it like that. And of course, as a result, your retirement policy cannot be used as a collateral for a loan. Most countries make sure that people's retirement funds are protected from insolvency and protected from creditors and protected so that they are not used as collateral for loans. So now, what is another advantage that you can think of? This is one of those investments I call a sponsored investment. Should you decide to invest in this by contributing to a pension fund or to your retirement annuity, then the taxman, most countries will say the amount of money up to certain limits that you put into a retirement fund or a pension fund, the taxman says, I will not tax it. I will leave it alone. In South Africa, for example, up to 27.5% of your remuneration or that which is called taxable income is tax deductible when you contribute it to a pension fund up to a maximum limit of 350,000 currently, and I'm talking currently as in the year 2020, right? And in Botswana, for example, you can your employer can contribute up to 20% of your salary, and you yourself can contribute up to 15% of your salary, giving you a maximum of 35% of your salary that you can put away to your future self. Now, wherever it is invested, as it grows, all the growth for all those years, compound interest, as long as it is in that registered fund, the taxman keeps looking away. So your money can grow for you to the future without the taxman touching it. Now, when you do retire, the taxman says you can take up to a third, 33% of that money that you had invested without tax, without it being taxed, that had grown within the fund without it being taxed. 1/3 of that you can still take as a lump sum, and the taxman says, I will look away, right? And then the 2/3 that you get, the taxman doesn't come and pounce at it. He says, I will only tax it as and when you go at your marginal tax rate. That's basically. So those are some of the greatest advantages you can have. Invest your money anywhere else, it is taxed first, and you invest. So a lot of people are paying more tax than they should. Now, I'm not against tax. It's important that you pay tax, but you don't have to pay tax where the taxman says you don't have to pay. So when you put it in a retirement fund, the taxman says, I won't charge you anything. I'm encouraging you to put it away. So now, one of the problems we face is people don't contribute enough to their pension fund, and that is why people retire and almost in poverty. Now think about if you're allowed 27.5% of your remuneration of tax or taxable income to be put away for your future self, or like I mentioned, a country like Botswana where 35% can literally go in there without being taxed. And if you contribute less, you are saying to the taxman, take some of it. So most people will contribute, say 5%. If you are contributing 5% to your retirement fund, the rest the taxman is going to take. So the taxman says, if you can't give it to your future self, I will take a portion of it. If you can't give it to your future self, I will give a portion of it. Now, people say, but I don't want to contribute there because I want the money to do something now. You are going to do that something with money that has been taxed anyway. So either way, you lose. So of all the other investment that you can think about that you are doing, here is one where the taxman is willing to say, you contribute here, you invest here, I am not going to take your money away. I'm encouraging you to put money away to your future self. So now, most people live as if there is no tomorrow. Now let me tell you, tomorrow is going to come. Tomorrow will surely come. And when it comes, it is important that you have enough money to be able to live life, easily. That can only happen if from your very first paycheck, from your very first moment that you earn, start throwing enough money in there. It doesn't have to be too much, but enough money in there. So it's a habit that you need to form throughout your working life. Imagine if you worked for 30 years, 35 years, and every single month you put money away where the taxman didn't take anything, and it continued to grow for 30 years where the taxman didn't even touch it. And then you arrive at your age 55 or age 60 where you want your money back and the taxman is still willing to look away. Well, why not use that? Now, once you retire and you get there, you can buy a guaranteed fund, you can buy an annuity, and you'll be paid for life. You could be paid. It doesn't stop you from trying other things. It doesn't stop you from investing in property so that you can collect rentals, but you remember there you are investing with money that's already been taxed. It doesn't stop you from buying any other investments that we have spoken about. But of all those investments, the only one that is so protected legally that your creditors can't touch, so protected that your insolvency cannot touch, so protected that even the taxman is willing to look away for all of its growth and some of those contributions that you're putting away. Retirement funding is one of those things that you should be able to have as part of your investment portfolio. But include this as part of your future investments, because at that age when you don't want to work anymore, this is a creation of a deliberate creation of a passive income. Deliberate creation of passive income. So if it is such a great advantage, why aren't so many people using it? Well, one, we don't know. So now, if you found this information to be helpful to you, click that like button. And if you think there's someone else who could benefit from this information in this video, click that share button and you can tag some people that you want to hear this. And if you would like more information on such topics as these that we cover to try to help people to think differently about their money, you can click the subscribe button so that when we do post, you can be informed. Click the bell as well so that when we post, the system can inform you that we have posted another video. Now, if you have employees or you have staff or people that you would like to gather together so we can be able to cover many more of these topics to them so they can make the right financial decisions for themselves, you can send us an email at info@muedi.net, info@muedi.net, or 101silverline@gmail.com, 101silverline@gmail.com, and you can contact us. We'll be able to get in touch with you. And of course, we got books. As you can see, we got a number of books that we have written, and a lot of these topics are covered in there, but there's of course a lot more that you can get if you get involved in a workshop setting with us. Or if you'd like to consult one-on-one as well, you can give us that email, info@muedi.net. Contact us or come in touch with us on our social media platforms. Our Facebook page is Money Skills with Nelson Letsweni, or you can like our company Facebook page. It is Muedi Financial Training. Muedi Financial Training. For now, that's all I have to say on this. Like I said, share the video, subscribe, and tag some people that you believe could benefit from this. And of course, always contact the services of a trained professional. Thank you so very much. Have a great day. See you soon. Goodbye.